Hello, and welcome to Wealth Matters, where we discuss the opportunities and challenges of preserving and managing wealth. This show is presented to you today by Gaslowitz Frankel, a law firm dedicated to resolving disputes involving your wealth, whether it be through your will, your trust, your business, or your investments. For news, pictures, and tips, go to our website at gaslowitzfrankel.com or follow us on Twitter at Estate Dispute. Our show's hashtag is Wealth Matters. Your hosts today are Craig Frankel and Adam Gaslowitz, and we're talking about wealth and philanthropy.
And now it's time to introduce our guests. We're pleased to have with us today Pat Renn, president of Renn Wealth Management, Justin Sullivan, investment advisor and vice president at PNC Wealth Management, and Itai Tsur, senior director of planned charitable giving and endowment for the Jewish Federation of Greater Atlanta. And before we get started, if each of you could just give a brief description of what you guys do for our audience. Itai, why don't you start?
All right. So thank you, Adam. Good morning. Thanks for having us. So I'm Senior Director of Planned Giving at Jewish Federation. And as of next month, as of January, that will be the Atlanta Jewish Foundation. So it's a big shift that we can go over later in the program. And basically, we enable donors to fulfill their charitable vision. So we are sort of facilitators, and we sit down and work with donors on whatever it is that they want to fund. And we find a variety of planned giving and other vehicles to help them get there.
Justin?
Greetings. My name is Justin Sullivan. I'm with PNC Wealth Management, where I am an investment advisor, and I am one person of a 5-person team where we provide investments, wealth planning, trust and estate services, private banking, and relationship management for wealthy individuals.
All right. Pat?
I'm Patrick Renn. The name of the firm is the Renn Wealth Management Group. I'm the old man in the group. I've been doing this for 40 years now, and we are a boutique operation that focuses on comprehensive financial planning for our clients, and philanthropy is a big part of that.
Well, let's start off. So we're sitting here right the day before Thanksgiving, and it seems like today is a time to talk about what we should be thankful for and potentially how we can go about making our gifts for the year. So let's kind of break it up and start with the kind of the obvious. We've got about 30, 35 days till the end of the year. Is there any advice that you have for our listeners who may have already given some but haven't quite finished what they could or want to do this year? So what could we do in the next 35 days for some of our listeners? And Pat, why don't we start with you?
Well, I would say this is the time of year where you sit down with your advisor or with a charity and look at your personal situation. One thing I would look at is to see what your taxable income for the year is. That's a helpful figure to have. And then what gifts you might have made and that are now left undone, perhaps, that you might need to clean up. And is any of the property that you own a candidate for that? Most charities focus on cash, but cash is typically the smallest percentage of anybody's net worth.
Justin.
Yeah, I think there's two ways to look at this, and this will be a theme throughout today's discussion, but I think you have the tax component, and then you just have the generosity factor along with it. And for those of us that are employed and some of us that work for large corporations, I think it's time to seek where you can enhance the gift that you give. And a lot of large companies have matching gifts. So it might be a good time to kind of look at the intraweb of your employer and just kind of look at some additional resources. Maybe the dollars that you plan to gift can be doubled by someone else who will match that gift.
And that's a great idea. I do want to mention that something Pat had told me before the show. Some families get together and try to do giving, and I have seen, and I think Pat has seen, some families where the patriarchs or the grandparents actually match the gifts of their younger family members as a way to start bringing them in, which also can work. And I'm telling all the grandchildren and the children, it's okay to ask your parents.
Yeah, I mean, I think that's an excellent point and really ties in the holidays and philanthropy and really taking advantage of these opportunities when families get together and with Thanksgiving, they're thankful. And I think that, when you describe what you're thankful for, it enables you as a family to sort of understand what is important to you. And I think that philanthropy is an expression, really, of what is important to you. Now, from the nonprofit perspective, the one thing I would want the listeners to be cognizant of is don't wait till the last minute. Everyone wants to get their gift in before midnight on December 31st if there's a taxable component or motivation. And the nonprofit organizations, I can tell you this from firsthand knowledge, are swamped. So the sooner you at least, and I'm sure we'll talk later on about things like donor advised funds where you can at least park the money before you decide how you want to express how you'd want it to be granted out. But yeah, I mean, please don't wait till the last minute.
Well, so on that note, a lot of families have a general sense of the kinds of charities they like to give to. Some of them have a history of giving to or supporting certain charities. A lot of people don't really know that. They know they want to be charitable, they know they want to give more, but they don't really have a particular charity in mind. And sometimes the best they can do is narrow it down to a category. And Justin, I know you and your firm do a lot of work with helping people sort of figure out if they're interested in domestic violence issues or they're interested in hunger or poverty, that you can help them sort of narrow down the focus to specific types of charities that may meet their needs. How do you go about doing that, or how do people do that?
Yeah, I think it's important to not become discouraged if you don't have a specific charity. Normally is one of two reasons. One, maybe you're just so preoccupied that you haven't put the thought into it, and the other reason could just be you become a little paralyzed in the due diligence around vetting this organization. So there are some ways to go about just choosing a classification or a general cause and to put your dollars in that place. At PNC, we do have a donor advised fund, which allows you to park the money into a general fund, and then you can choose the charities afterwards. So there's no rush to do that. And
Tell us, our listeners, what is a donor advised fund?
Right. A donor advised fund is a tax exempt charity in and of itself. So essentially, it is a way to make a donation. A charitable donation, you reap the tax benefit immediately, and however, you don't have to deal with the due diligence or just the general pressure of trying to select a beneficiary of those funds. So these are assets that are invested, and there's a number of different ways they can be invested. But the two main benefits of a donor advised fund is that, for one, you can optimize the timing of your gift. We talk about this being the end of the year, so you can put the funds there, get the tax benefit, and worry about the beneficiary later. And the other piece is the administrative component, so full tax preparation on the gift and just the general due diligence around the beneficiary.
So, for example, if someone knows they want to give $10,000 before the end of the year, they just don't know where and they don't have time to think about it, they can set up a donor advised fund with PNC, or I know with Federation also, and the Atlanta Community Foundation, and that money is treated as if the donation were made in that tax year, even though they haven't actually given it out to a charity yet. And then you guys would maintain the account and allow the donor to then decide either at that time or over time where to dole out that money.
That's right.
I want to go back to the benefits of donor advised funds, but before we do that, Pat, can you tell us, because the first thing you mentioned was there may be tax motivated reasons for giving either beginning or the end of the year. Explain kind of generally what that is.
Sure. The major tax benefits are current deduction for the gift. And typically that is limited to 50% if it's cash, 50% of your adjusted gross income, 30% if it's other type of property, typically long-term capital gain type property. Most people don't use that up. And even if you do, you have 5 years to carry that forward. So that's the tax motivation. I would tell you that in my experience, I've never developed a gift solely through tax motivation. But I will also tell you I've been successful in increasing a gift because of the tax motivation. Most people can give more, they just don't know how.
Itai, explain to me, so we've got donor advised funds, and we heard Justin talk about them. It seems to me one of the advantages of a donor advised fund is the ability to plan your giving and know how much you're giving in any given year. That kind of helps you regulate. Right. Are you seeing families doing that type of, for lack of a better word, regulation and planning?
Yeah, I mean, Craig, I think that one thing I would add just about donor advised funds, in addition to sort of the timing that they enable the donors to make. So in a sense, you've made your gift the moment you give it to the nonprofit. or to whatever the housing organization is, but it's always a nonprofit. And it's important for listeners to understand that you have given up control, and that's an important thing that we constantly remind donors, in that you don't, for their protection, if they do want a tax deduction for these kinds of gifts, it's all the hallmarks that it is ultimately the nonprofit that controls these assets have to be in place. But what they have is they've established advisory privileges that the nonprofit takes with great gravity when they ask, I recommend that it go to such and such organization. The only other thing I would add, for the benefit of Donor Advised Fund, is it in many ways operates like a private foundation, offers a lot of flexibility in the kinds of gifts that you can make. So we, for instance, this time, and I was just looking at an email on my way in, we have
Not
donors,
while you were driving, of course.
No, heaven forbid. On my way in, that we have donors who are private business owners. They don't have publicly traded assets. So a lot of people will put cash or highly appreciated assets, I'm sure we'll talk about that later, into their highly appreciated publicly traded assets into their donor advised funds, which is very common. But we also have a framework in place to accept illiquid or non-publicly traded assets, and many of the same benefits of making those kinds of gifts are available because you have a donor advised fund, and it again enables you to add that kind of step to control the process to some extent of how the money is given, when it's given, and the timing. So in terms of, Craig, your question is, do people really utilize the donor advised funds to create sort of a structured framework around the giving? The answer is absolutely, and it's really a wonderful tool, for the grandparents who want to match gifts. For you to have that discussion around the Thanksgiving table, that this donor advised fund exists, and you really can plan out the next year, 5 years, 10 years around your giving, depending on how much is going into the fund.
Yeah, and just so we're clear, because I'm not sure the audience is completely clear on this yet, when you talk about making the donation to the nonprofit, let's say it's the Federation or PNC or the Community Foundation, that's the nonprofit you're talking about in terms of when the donor gets the donation.
Correct.
But that is not the end recipient of the donation. It then is parked in that entity.
Right.
For further distribution to the specific charities that the donor would then want to give to.
That's exactly right.
And it could be charities that are not affiliated with the nonprofit or the donor advised fund.
Right. So Jewish
holder.
Federation. Right. So Jewish Federation, we have several donor advised fund holders, for instance, who are not even Jewish, and many. And I look over, and the other thing is, as the nonprofit that houses the donor advised funds, we audit and make sure that the organizations that you're making recommendations to make distributions towards are in fact legitimate organizations. We check their 501c3 status. We, if there's anything that seems odd about them, we, alert the donor and make sure. And this is all to protect the donor.
So you're doing some natural vetting that is hard for individuals.
Right, and they don't have the time, nor they're busy.
Or the ability, perhaps.
Or the ability, correct.
And Justin, you talked about controlling it. Who makes the decision on or how it's going to be invested? Once you've put it into a donor advised fund, I assume it's a pooled fund, so to speak. Who makes the investment decisions?
Right. So it is a pooled fund, and I should probably say pooled funds. There's a few different flavors, if you will. There's a sort of a money market style fund, and you can go up to more of a growth oriented style fund. And I think it's worth noting that the tax benefit that comes to the donor is for the amount that they give. So if you put it in a growth style fund and this investment grows and dividends and interest come to the fund, that is not something that is tax deductible. It's an irrevocable gift that is donated, and you get the tax benefit up front.
I always like to define irrevocable because we always forget which one it is. It's kind of like regardless and irregardless. You know what it means, but you don't really. Irrevocable means you can't get it back.
That's right. That's important to know. And to answer your initial question, there is a general fund manager, I'll call it, that makes the investment decision. So the donor can decide whether it's going to be in the conservative or slow lane or in the aggressive, more fast lane. But ultimately, the changes within mutual funds, the investment decisions are going to be managed by a portfolio manager that runs these programs.
Can the donors decide that for a while they're in a conservative kind of funds and say, now I think we should go to a growth phase?
They can.
And also, there's no requirement that the entire amount that's donated to the fund be distributed to one charity or another, right?
That's correct.
Okay. All right. In terms of the things that you can donate to a fund, Itai, you alluded to non-liquid type assets.
Right.
But there are other things that you can donate to these funds that will give additional tax benefit and and thus perhaps additional amounts that can be donated to a charity. For example, appreciated stock. You can sell stock, pay the capital gains tax on it, and gift the remaining cash, or you can donate the appreciated stock and have the entire amount, absent the tax, be donated.
So you kind of can up it up by not having to pay the tax.
Yeah, that's an excellent point. I think it offers you an opportunity to increase the gift.
So highly appreciated stock, the Coke stock you bought for $1 that's now worth $50 a share. You can donate a share, get a $50 deduction, sell the stock, not pay any capital gains, and be able to give the whole $50 away.
Right, and if you still want to own Coke stock, you can buy some Coke stock, and you've increased your cost basis, and therefore, in the future, you've lowered your personal tax.
So what you do is you take the cash you would have given to the charity, buy the Coke stock,
Correct.
or whatever, and you give the appreciated stock
Correct.
to the charity. You've avoided the tax, you've gotten a deduction,
Right.
and now you can go from the appreciation from
Right.
whatever you paid for it.
And that deduction is worth something, depending on your tax bracket. You can use that savings to repurchase the stock if you so choose.
Itai, you talked about non-liquid assets.
Right.
That kind of I wasn't familiar with that. How do you use a non-liquid asset in a donor-advised fund?
I mean, so I'll give you an example of something that we see, and I expect we have, what you said, 35 days. I expect to have at least 2 or 3 of these come up. You're a business owner, and you're about to have what the advisors call a liquidation event, right? So someone's either about to buy your business, or they're about to invest heavily in your business, and the shares of your business, Craig Inc., or Gaslowitz Frankel, right?
Craig Inc. sounds nice.
That the shares of the business suddenly are worth a lot more because you have a lot more this infusion of cash or other value. And let's say it's Craig Inc.'s about to be sold. So whatever your basis is, and usually if you're a founder of the company, it tends to be extraordinarily low. You have a tremendous amount of appreciation in that business. And so what happens is you say, okay, Itai, I want to give into my donor-advised fund, say 20%. That's a sort of a magic number for other reasons, but 20% of my company, and thus I'll have 2 benefits. One, as Patrick said, you'll have the benefit of writing down you'd have the available to the tax deduction inclusive of any capital gains built in to that value, and you will then also have funded a donor advised fund with a very highly valued asset. So what happens is you gift the asset before you are under any obligation to sell the company. So you want to be clear of any sort of understanding, certainly any formal understanding that you're about to sell the company, and you'll gift that to the federation or whatever the housing nonprofit is, and then they'll be your partner with a 20% usually non-voting interest in your company.
But the appreciation will be non-taxable.
Correct.
Is that okay?
Correct, right, because you've given it to an organization that's a nonprofit and doesn't pay tax.
So the capital gains tax never gets paid on that portion.
Well, the way we look at it is it just gets moved to the, instead of going to the government, it goes to the operation of the nonprofit, which has been set up by the government to sort of to offset some of the government's responsibilities. Right?
He gave you the Trump answer. You're allowed to take advantage of the rules.
Absolutely, and we encourage that. But in the end, and this goes back to the overarching. I mean, philanthropy isn't only about tax planning. And when we talk about arrangements that I just described, that's what we call a federation strategic philanthropy. But in the end, it's all philanthropy. And so, yes, you should take advantage of the tax rule, and you should maximize your giving. And these rules exist for a reason, right? I believe it's been since 1919 we've had charitable deduction for giving to nonprofits, and there's good public benefit to that. But Trump answer notwithstanding, definitely take advantage of the rules and definitely maximize your philanthropy.
And just to put it in perspective, 1919 is just a year or two after we implemented the income tax, which I think was 1915.
Yeah. All right, you're listening to Wealth Matters, the radio show where we discuss the opportunities and challenges of preserving and managing wealth. We're your hosts, Craig Frankel and Adam Gaslowitz from the fiduciary litigation firm of Gaslowitz Frankel. We're talking today with Patrick Renn, president of the Renn Wealth Management Group, Justin Sullivan, investment advisor with PNC Wealth Management, and Itai Tsur, senior director of planned charitable giving and endowment for the Jewish Federation. We're discussing today wealth and philanthropy.
We heard a minute ago about Thanksgiving being a wonderful time to sit around the table and talk about charitable giving. So let's put each of you on the spot. How many of your families that you're advising are actually doing that, sitting around the table around Thanksgiving and talking and planning for their giving?
Well, I'll go first. We've suggested this to a lot of folks, and they really like the idea. Now, how many of them have actually implemented it? We'll find out next year when we sit down and meet with our clients and review their situation. I'll remind them that we mentioned this and had they taken advantage of it. So I'll find out. My guess is most of our clients have philanthropic bones in their body. And one of the values that we can bring to the table is to help them transfer this to the next generation and the next generation after that. So I think a lot of them will take advantage of it.
And you just wrote a book called Finding Your Money's Greater Purpose, and a lot of what you talk about in the book is helping families who are already charitably inclined to realize that they can do more, that they can do things perhaps sooner, and that they are more capable than they might otherwise have thought.
Absolutely. These examples of the Donoradvised Fund are great examples of how you can increase that gift. The magic words are, I wish I could do more, but. And the but is, I need to put my kids through college. I need to have more income for retirement. I need to take care of a special needs child. All those can be enhanced through philanthropy. And that's what a lot of people don't really understand.
So you are able to actually save and for the unexpected, kind of the fear of every adult with children. What am I going to do when I'm old? And still use philanthropy not only in a good sense, but also to help you with that planning.
Absolutely.
So how do you start that conversation? I'll throw it out to Justin or Itai. How do you start that conversation? So there are people listening who may be charitably inclined themselves. They're business people. They work in the community and donate in the community, but they haven't really brought their family along. How do they start that conversation? Maybe it's around Thanksgiving or some other time, but how do they begin to discuss with their family?
Yeah, I think Thanksgiving is a perfect time, and Itai made a really good point in that, making charitable donations is a very important part of the family, and I think it's a legacy component to what people are doing, and so you have to look at the bigger need. Itai made a point about taking advantage of the tax situation that we have or the benefits that are available, but I think the more important aspect is that federal spending towards charities has been on a decline for a long period of time. So there's a need that needs to be met. And I think you start the discussion as a family and say there's a need out there. There was a time where the government gave more to these causes, but they don't as much as they used to. And however, there's a silver lining, and that is there is a tax benefit, or in other words, there's an incentive for us to step up and to take on this role, and it's really a societal role. There's a benefit for us all. So I think that's how you start the discussion with what is the problem, and where do we stand in that? Where do we have an obligation really to step up and give?
Yeah, and just to piggyback on what Justin said, there's very interesting discussions, I think, in Jewish text, and not something I have any expertise in, about whether the altruistic nature of philanthropic gifts, if you're giving purely for altruistic motives, you see a need and it's unmet, and even if it's not something you care about, is that true altruism? Or if it makes you feel good, right? If it's an activity, not unlike sort of the thrill one gets from buying a new watch, right? If it just makes you feel good to be doing this, is that true altruism? Because part of your motivation is that desire to feel good. And my answer is yes and yes. I mean, give for whatever reason you want to give. So I think that
the charities are
the charities are happy to take the money's good either way. But in terms of having that discussion, I think that people, I wish if I could sort of impart one thing, I wish people would think more and more about giving just so they can feel better about the end of the year. The end of the year can be a very stressful time for a lot of people, family. I mean, I know you guys deal with it firsthand in your work, and I think
Are you saying we get an uptick in January?
I can only fathom. But I certainly believe that even if one's motivated just to feel a little better, about their situation by making the lives of others, by improving the lives of others, I think that's a very powerful motivation, very powerful way to open up those discussions.
I don't think that's an insignificant point. I mean, there may be some component of selfishness in the idea that if you're giving to a charity and feeling good about having given, that there's some selfishness in that. But I don't think that's really the answer. I mean, I think that feeling better about being connected to the community, being connected to the needs that are around you and addressing those needs makes you feel more like part of that community, and makes you feel like you should be more involved and maybe give more. And the change that happens when you start giving is sort of a lifetime change. It's not just a one-time event. The difficulty is imparting that to your children, and to have them become a part of that same process so that they get the same benefit out of it that you do. And that's the harder conversation to have. I think people are just uncomfortable with, taking perhaps their small children, sitting around the Thanksgiving table and talking about how, we as a family are going to start making contributions, and the children are going to help decide what gifts perhaps to make. But bringing the family along creates more than just a gift. It creates sort of a lifetime identity with connection and community and giving.
And let's actually emphasize that a bit more. We're seeing now what I think is a wonderful trend of giving more during life than necessarily in a testamentary gift, a gift after life. And those are wonderful gifts. But one of the advantages of giving while you're able to is you get to watch the benefit of your giving. And more importantly, your kids get to see what good that you were able to do. And to me, it's a further example. But let's go back to what Adam said. Trying to teach kids to want to give. It's very hard. Our children growing up today, there's so many commercial things. They want more and more, and we're able to give them more and more. How do we talk to them and instill or suggest to them that maybe they should be thinking about others?
I'll start. I think it begins with volunteerism. I think it's a very good practice to begin volunteering with your time. After all, when you're a child and you don't have income, that you can give your time. So I think that's a great place to start. And I think it's a beautiful thing to volunteer, to get to know the people who are making the decisions within the nonprofit, and to kind of build a relationship and to see where your money goes, whether your kids are given $10 or whether the parents are given $10,000. I think it's more about the proportion that you give, the heart with which you give, and I really think giving of your time is a great place to start.
That's a great point. I think that if you can get involved together, it's even stronger. Years ago, I was involved with the Georgia Special Olympics. I have two boys, and there's a winter game and a summer game. And I would take one of them, we'd spend the night and volunteer at those events. And, you never know what effect you have, but for me, that's part of the legacy, part of the family legacy. No money was involved. We just went and gave our time. Wonderful cause. They got to see the effect of volunteering. So I would say it's not always about money.
And it's part of the problem I find with my peer group is a somewhat level of discomfort and volunteering. It's something they haven't done. And how do you start teaching your children to do it? You just said something that's fascinating to me, which is being away with your child alone. To me, that is a gift. Mm-hmm. And it doesn't, if you're volunteering, it's even better. But the time you're going to have to talk and to be alone will be so special. But let's talk to those parents who, for whatever reason, haven't volunteered a lot and they find it difficult. How do you help them volunteer with their kids?
I mean, again, I think it all begins with a discussion, understanding sort of what's important to you. I had a memory of probably 25 years ago. It was right around Christmas time, and my father, who didn't volunteer a ton but loved animals, and he decided, let's go to the shelter. We're going to go, buy whole bags of food and bring it to the shelter. To the animal shelter. And, those are indelible memories for me. And I think that the
fact that you remember it 25 years
Absolutely.
later is in and of itself significant.
And so, I guess the point is, it doesn't take, it's kind of like when you lose touch with a friend and then you're like, well, what are we going to talk about? You start with something, and so even one single instance of volunteerism, you say, okay, this is important to me. What can I do to express and to really feel that I'm actually helping, even in some small part? And I think that that's another thing that oftentimes we look at some major issues, poverty or the inequality gap, and things that no one individual, no matter how well off, can dramatically impact. Mm-hmm. It's not about one person's actions in their lifetime dramatically impacting, but it's about, as Adam had said, it's really about a lifetime of being more, having more awareness and more of a sense of purpose vis-a-vis that cause. And I think it just all comes back to it's important to you. It's sort of it's maximizing fulfillment of your life by taking actions that express that.
Yeah,
Okay.
One thing you can do, even if you're not volunteering, is to deliver the checks in person. You can have the kids help pick out the charity. Maybe it's a humane society or something that the kids might be familiar with. But having them physically deliver the checks and go down and see the operation as opposed to just dropping it in the mail, we found in the past has a huge impact.
Okay, let's go back. I want to go back to the Thanksgiving meal. So I think we're having ours this year for the first time. We're not going away. It's my whole family. And so we're going to have 3 generations. And we're going to have kids as little as 2.5 and kids as old as 24. And parents, we're not going to say what they are, and grandparents that have 8s in front of their numbers. We're going to eat at 5 o'clock. What ideas do you have for me and people like my family for us to start this conversation? I want you to assume that we've never done this.
I mean, I'll start. I think that the opportunity to say this is what I'm thankful for provides a tremendous inroads to expressing what's important to you. I'm thankful that we have a roof over our house, a roof over our heads. I'm thankful that we have this food and our families together. And I think that can open up a lot of discussions, if you so direct it, to what your values are and where in the community around you you can express those values in a philanthropic or charitable or through volunteerism.
Should you have come there ready with suggestions, perhaps the patriarchs and matriarchs of the family saying, let's take a first step, or should you start with just talking?
I think you should start with just talking. And when I think about Thanksgiving, I think about this. There's this great divide that is the adults table and the kids table on Thanksgiving. And I think sometimes whether that...
We just learned a lot about your family.
whether there are actually 2 different tables or not, I think there is always the adult issues and the kid issues. And I think they need to be combined, come together. I think everyone should have a responsibility. I'll just kind of, as I think about millennials and just children that have a better handle around technology, there's a lot of different ideas that they can contribute to. I mean, the adults may have the general thought about charitable giving, but the kids, I mean, there's GoFundMe accounts, there's Twitter, there's all kind of ways that a younger generation can go about accumulating money to give. And so I think we'd be a little closed-minded to think that the older generation has the money and the kids can help by picking and vetting. I think the kids can raise funds too, and I think they'd be excited to do it.
Yeah, I like this idea of starting with what we're thankful for, and then the next question is, well, what do you want to do about it?
You're listening to Wealth Matters, the radio show where we discuss the opportunities and challenges of preserving and managing wealth. We are your hosts, Craig Frankel and Adam Gaslowitz from the fiduciary litigation law firm of Gaslowitz Frankel. We're talking today with Itai, Tsur, Justin Sullivan, and Pat Renn. Let's kind of pick up on that. So starting on the idea of talking about what you're thankful is pretty amazing. What are some of your suggestions as families start to kind of dip into it to get their toes wet? What are some suggestions you would give to families as to ways they could start the process, knowing that it is a journey, not a single trip?
Let me just give you a very concrete and recent example. I have a client whose son is a cancer survivor, and he sent out an email the other day and said, we're thankful for his recovery, and we're going to have a fun run to raise funds for the cancer center. Would you be willing to contribute? That's just a small example. There are lots more like that. But I would say if there's anything like that in your family that you can focus on, that might be a way to get started.
I've recently been given some really good advice about giving, and I think you should give from two places. You should give from what you're grateful for, and you should give from what your heart is broken for. So I think that the Thanksgiving discussion should begin with what you're grateful for, and it can move on to what is your heart broken for this year? What hurts you?
I like that.
We recently did some work with Dr. Marshall Duke at Emory University, who for the last 20 or 30 years has been talking about the importance of storytelling in keeping families together. And I think that in discussing sort of where you've come from, the ups and the downs, from rags to riches, there's been a lot to suggest that it enables the next generation, and kids especially, to have a better context of where they come from and their own ability to withstand what life throws at them. And I think that in telling that narrative, there's a lot of opportunity to express, how philanthropy and how your values really have kind of fueled the family story. And so I think that broader narrative really provides you with long-term context to provide to the kids.
There are probably a lot of families who don't really know where that came from. I mean, there's a lot of first-generation wealth that we deal with. Most wealth in this country is first-generation wealth. And there's a lot of families of those entrepreneurs who really don't know how that entrepreneur started, how
Right.
what their life was like, and how different it is from the lives that their kids have led.
And entrepreneurs tend to be they tend to be more philanthropic as a rule. I think usually because they understand all. When I was getting my MBA, there was some class where they were talking about you have all these books that say, okay, well, if I just do what Lee Iacocca did, well, I will be fabulously successful, and it doesn't account for things like luck and other people helping him. And so I think that entrepreneurs, really typically understand, because they've worked so hard to build what they have, all of the societal factors that went into really helping them along the way. And I think that's why they tend to give back so much. And to the extent that they could impart that knowledge to their kids or their grandkids, I think it could do a world of good.
So how do you start? The conversations around our dinner table often centered around we want to give a certain amount this year, and we'd like the family to decide who gets what. So we want input from the children, and no grandchildren in my case, but when we had dinners at my in-laws' houses, there were grandchildren involved, and the discussion would be, we want the children to decide some of this. This portion is going to be decided by them, and this portion is going to be decided by us. And that discussion created an interaction among the children and the grandchildren that was a pretty healthy discussion that sort of carried on to this day. And that type of discussion, I think, is probably a useful thing to start out with, to say that our children are going to either pick or help us decide where we as a family are going to give to. And that discussion, I think, is hard for some, but I think it worked pretty well in our family.
And let's talk about some mechanisms. Sometimes you don't want to share the amounts. Sometimes you want the kids to participate financially. Sometimes you don't. Sometimes you want matching. So kind of give us some ideas that families might use. And this could be families that are donating a small amount because of their economic means, or a large amount because, from my perspective, and I hope we've shared this with our children, you give no matter how much you have. You can give in different ways, volunteering, other things. So what are some of the ways families can talk about giving together?
Well, I'll put in a plug again for the Donoradvised Fund, because that can actually be a perpetual fund that you can groom the next generations to be involved with. Not only contributing, but having some knowledge of what happens to the money over time, the investment side and the giving side. So I think it's a great tool to help educate that next generation. Doesn't always have to be money, but that's a great source if it is money.
And now I would just add that I think that when we look at something like a donor-advised fund, or even just a family mission statement, all right, so whatever we decide as a family, it's the act of we decide that really is where your family gets the benefit. Now, it may, in an ideal world, it enables them to avoid having them to turn to you, years later should something go south in their family.
It's called the basement.
Right. But that's where I think using something like whether it's a donor advised fund or whether it's even just saying, look, this year we're going to then go to the Special Olympics and volunteer. Craig, I mean, you made an excellent point. There's always something you can do, and I think that one of the issues when we use falutin words like philanthropy is people think, well, I need to have a net worth of $50 million before I can consider myself a philanthropist. That's not what it means. It means that you care about your fellow man and you want to do something about it. And some of us do it through sweat equity, and some of us do it through infusion of money, whatever we have the time or the will to do.
Interestingly, statistically, people with less money give a greater percentage of their income to charities than people with more money, and it may just be where they are. Mm-hmm. Justin, could you answer one question for me that our listeners may want to know? Is there a minimum you've got to put into a donor-directed fund before you can start the fund?
Yeah, I'll throw out a few numbers here. When it comes to the donor advised fund at PNC, there's an initial investment of $10,000. You can add in increments of $1,000, and you can make donations to charities with as little as $250. So those are kind of the three important numbers associated, and that's just with the PNC donor advised fund. That may vary for others.
And Itai, tell me what those numbers might be for nonprofits that are doing the same thing, or perhaps other wealth management advisors.
In terms of our minimums and such?
Yes.
Right. So speaking at least for the Federation, we just changed our fees about 10 months ago. It's $2,500 to open a donor advised fund. And you can give as much or as little as you want. The minimum increments to a nonprofit are $100. That's to cover any administrative costs that we have to. You'll get a letter sent out accompanying a check, et cetera, and obviously the accounting for it.
Okay, we're nearing the end of our show, and I do want to put a plug in that we can do whether we use donor advised funds today and kind of decide our charities later. It's a good idea to start thinking about charitable giving at the new year as well, and to think about the planning. What are we going to do in the upcoming year? And following up and making putting it on the calendar for next Thanksgiving to talk about what you've done from the first year. But you got, 30 seconds each. What is your advice today? What should a family do today at the end of the year with 35 days left? What are the opportunities, your best suggestion that somebody should suggest at the Thanksgiving table tomorrow?
I would say make the gift as soon as possible.
My best piece of advice is to focus on January 1st. You've got a few weeks ahead of you. Just plan and just make sure you start the new year off with a clear, written out plan so that you can at least start from a clean slate. Because right now, aside from a few different bits of action, it is late. It's late in the game.
Right, and I would say for those, especially those who have more assets to give, start focusing on where you want to give instead of, we tend to spread it out because it makes us feel good. But if we really want impact, understand what your family mission is. Start focusing on what nonprofits are consistent with that mission. And as Justin said, really start writing down, and I would say chronicle even, all that you're doing so that you have something to go off from year to year to year, generation to generation.
And I'm going to tell you what I've heard today that you haven't told me, but I've actually heard it. When I go back today, I'm going to make a list. I happen to be somewhat organized, but I'm going to make a list of what I've given to charity this year already. And I'm going to talk with my family about how much more we're going to give this year, because I often give the majority of my gifts in December. And maybe that'll help me start planning better for next year.
Yeah.
So as part of that discussion this year, we ought to talk about what we're going to give before the end of this year and talk now about what we're going to do differently next year. Let's talk in January about how much we're going to give during 2016, and let's plan out starting in January, not in November, how we're going to make those gifts happen. Let me ask each of you to provide contact information, website, social media, hashtag, whatever you'd like for our listeners to be able to contact you. And Pat, I know you're very social media savvy, so I'll let you go first.
For an old guy, I am.
By the way, you look young to me.
Thank you. The website is www.renn, R-E-N-N, Wealth Management, rennwealth.com. I would say that I would encourage anyone that is interested in this, if they would read my book. It's on Amazon, available on Amazon.
And
it
again,
is Finding Your Money's Greater Purpose. If that resonates with you, then we've got a match. If it doesn't, we don't.
All right, Justin?
Yeah, again, with PNC Wealth Management, I'm based right here in Atlanta, in Buckhead. But PNC Wealth Management has a large presence throughout the country. Specifically, my information, justin.sullivan@pnc.com, and would be glad to take a call, 404-495-6443.
Right. So Itai, Tsur, Jewish Federation of Greater Atlanta. Best way to reach me is either by email, T as in Tom, S as in Sarah, U, R as in Robert, at jewishatlanta.org, or you can call me at 404-870-1608.
As we're wrapping up our show, I want to thank everyone for listening to Wealth Matters, where we talk about the opportunities and challenges of preserving and managing wealth. For more information about Gaslowitz Frankel, please go to our website at gaslowitzfrankel.com, and remember to follow us on Twitter at Estate Dispute and use our show's hashtag Wealth Matters. Our guests today were Patrick Renn, Justin Sullivan, and Itai Tsur, and we were talking about philanthropy and how we should go about making gifts. Please join us every fourth Wednesday of the month at 8:30 a.m. here at Wealth Managers on Business Radio X. And please, all of the attorneys and staff at Gaslowitz Frankel would like to wish our guests and our listeners a happy Thanksgiving.